Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, January 2nd at about 2 p.m. Eastern. Well, the S&P 500 is relatively unchanged at the moment in the first trading day of 2026, as gains in semiconductor names are keeping losses in check. As we know, tech was the best trade of 2025, leading the broader market to sharp gains as investors continued to pile into AI names. The S&P 500 gained more than 16% last year, marking its third straight annual advance. The Nasdaq jumped more than 20% last year, and the 30-stock Dow advanced around 13%. The three benchmarks hit record highs last year. My goodness, it's already last year. Okay, now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $682.90. That was after hitting an intraday high last week at 691, just above 691, just topping the October highs, which were back here at 690. Whoop, I don't know if I can draw a straight line or not. Anyway, we can see how these highs have all been touched here. Very important. Three times we've tried to go over this 690, 691. Haven't made it yet. Anyway, as I speak right now, price is right on top of the 20-day moving average, the red line, which is coming in at about 683. The 50-day moving average, the green line, is right underneath price at 678 and change. And the 200-day moving average, the black line, is down here at 627 and change. Now, we know that for the most part, the SPY has been walking up. Of course, this red line, the 20-day moving average, since rallying off of its April lows at 481, you can't see April on this chart, but as you all know, the market took a big turn on April 7th, and price of just about everything went down on that day, but then rallied nicely. So since rallying off its April lows at 481 and then trading in an uptrend, pretty much walking up its 20-day moving average here, pretty much since April, started to bend a little here and get a little tired, but it went all the way up to this October high at 690. That was a 44% gain. Now, I just talked about yearly gains a minute ago in the introduction, but those are different than from the April lows because price dove pretty low, and so it had to start at a lower spot than the annual low, than the January 2025 lows anyway. So, but from those April lows up to the October high here, the SPY gained nearly a 44% gain. Now we have to see, and it has been moving in an uptrend, now we have to see if the SPY can continue this uptrend in deeply into 2026. Now, if we look at resistance here, we know that nearby resistance remains here at 690, 691. Nearby support is just a couple of points lower here at, excuse me, the 50-day moving average, again coming in at 678 and change. We have this little pivot for what it's worth at 670. We have the November low back here at 651. And then, of course, we have the 200-day at 627 and on down. So next week, we're going to see the ISM manufacturing index. That can be important. And the jobs numbers are always important. And mega important, pretty soon, the fourth quarter earnings season will also start. So we got to buckle up for that one. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF which follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like NVIDIA, Meta, Alphabet, Tesla, Magnificent Seven, that whole group. Now, when I captured this chart today, we sometimes call them the cubes. The cubes were trading at $613, right down here on right there, on the bottom of that red candle. When I captured this chart today, the cubes were trading at $613.68. Certainly below this October high back here, came in at 637. And so at the moment, the cubes are trading, they're coming in, there's trading just below the 20-day moving average and the 50-day moving average, coming in at 613 and 615. So this is all kind of glommed together here, kind of hard to separate out. But basically, price and those two moving averages are pretty much within a point or two of each other in the same place. And then down here, of course, we have the 200-day moving average coming in at 558 and change. Now, as we know, and you can't see it on this chart, the Qs made at the April 7th low at 402, and then pretty much rallied from there, but of course in a much more dramatic fashion than the SPY. The cubes are the drama kings or drama queens, whatever you want to call them, and they always make things more exciting, certainly than the SPY does. So the cubes came up, walked up the 20-day moving average for the most part, dipped here and there, but from April all the way up to November. Now we did have a drop here in October, but they rallied all the way up here to these highs at 637. That was a 58% rally. And again, that's not the annual rally. That's not from January to now, from January 2025 to now. That is from the April low to these highs that we're looking at, because from the April lows, we had a 58% rally in the cubes. Very, very cool. But nothing lasts forever, does it? Markets move in cycles. So from the highs at 637, the Qs did a dumpster dive here down to 585 in November, then rallied up to 628 in December, then fell down to 600 right here, and now they rallied up from 600 back up above their 20 and 50-day moving averages, and then in the last couple of days have been falling down at least ever so slightly. So we know that nearby resistance is here when we have to start dealing with it. Nearby resistance is at 625, 628, and up at the 637 point. We know that down here we have potential support at 600, down here at 585, and down here at the 200-day moving average at 558. So that's what we have to contend with here. Now you can tell here that earlier in this chart here, if you look left with me, earlier in the chart, price was dramatic, but pretty much in an orderly manner, walking up the red line, the 200-day moving average, in a pretty orderly manner. And then you can see, if you kind of back up in your chair and look back, then you can see how the candles start to change their character here. Now you see that they can open at the highs, big red candles, close at the low, then trundle up a little bit more, make a dramatic up move, which probably won't last because nothing does at that angle, and then fall back down again. As you can tell, the bulls and bears are arguing here. So price is actually getting tired, and the moving averages are getting, now we're falling all the way through. Moving averages are getting more like quicksand. So in this coming week and as we move into January, we're going to have to see if the bulls can get traction again, because right now they're getting a little unsteady on their feet. Okay, so mind your protective stops, probably a good idea. For our third chart today, we're going to look at a daily chart of the Global X blockchain ETF, the BKCH. We haven't looked at this in a while, notably because it was all fall down in this particular arena. The Global X blockchain ETF, symbol BKCH, has 35 holdings. The top holdings include Coinbase Global, Iren, Bitmine Immersion, and Applied Digital, and TerraWolf. Now, when I captured this chart today, the BKCH, I'm just going to call it the blockchain, was trading down here, as you can see it, at $70.24. It's trading just below the 20-day, the red line, which is coming here at 72.10. 72 we can call it, trading below the 50-day moving average, which is coming in at 82. And using the 200-day moving average, the black line as support. And that's the 200 days coming in here at 63.52. So just call it 63 if you like. So it's being held up by that. It's also sitting on support from, if I can draw a straight line, it's also sitting on support. Its earlier consolidation back here in July, August, and September. It's sitting on that right before it broke out. So that seems to be a good area of support anyway so far. Now this ETF, as you know, targets the crypto marketplace. And you also know, I'm sure, if you've been watching the market, that Bitcoins and other crypto coins have fallen recently. So, of course, the blockchain stocks have fallen suit. Right now, the way, see, it jumped up, and I'll talk about it in a minute, then gave back all its gains, kind of right back where it started in July, August, September, and sitting on that, using it as support. So the setup itself at the moment looks like a pretty big, good setup, but we have to see, or I have to see, if this low can hold right here, and if the blockchain can start higher from here to make a good trade. Now, you can't tell on this chart, you can't see it, we can't go back to April, but if you could see the April lows, believe it or not, the April low for the blockchain was 28. So it started walking up its 20-day moving average from there, walked up the 20 days, you can see, then consolidated through August, and in September broke out pretty dramatically in a very steep uptrend here. Oh my gosh, a very steep uptrend, really steep angle up to its high up here at 124. Talk about euphoria. Please know with me, it doesn't matter what asset it is, any stock or ETF that moves at this angle, it's tons of fun to trade as long as you keep pulling up your protective stop. It's fun to trade, but when you see anything trading at an angle this steep, at some point the profit takers are going to come in for sure. Absolutely, and you can see where it happened here. Again, the bulls and bears started arguing up here. Gapping up, falling to the lows, yay, up and down, up and down. Then we see what's kind of an evening star here in candlestick technology. And then it started down, then made a lower high, which is telling you the bulls are refusing to buy anything more. They're putting their hands in their pockets. Then it came all the way back down to its November low down here at 63, then up to 84 up here. Then retested its low down here at 63, then up to the 20-day, down to the 200-day. Look at how these moving averages act as support and resistance many times. And today, again, to where we are now at 70.24. So what I'm looking at here is if in the coming week, the blockchain can stay above its 20-day moving, its 200-day moving average, again, coming in at 63 and change. If it can stay above that, I'm going to buy a small position of the blockchain in my trading portfolio with a stop, and I'm going to put my stop at 62.75. You may want to put yours higher, that's fine. If and when the blockchain can rise above 83, which is these highs right here, and close above it, I want to close above it, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to, keep an eye on the blockchain, especially if Bitcoin starts moving up. That's going to be the leader. You may want to keep an eye on the blockchain in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, it's a great time of the year too. Start out strong to check out my timeless training programs. 7-step, or how to swing trade, they're all good. How to swing trade successfully shows you how to enter during upswings, grab the sweet spot from the price move, and pocket your profits before the price starts lower. You will discover how to trade my Sleeping Tiger setup, which thousands of traders have used and I use myself to trade. And you will learn how to use it over and over and over again to make consistent profits. Now, our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So, from our ever-popular 7 Steps to Successful Trading to, again, our very popular How to Swing Trade Successfully, How to Trade the Trend to Profits, I love that one. How to Read Charts, great for novices. 3 Winning Setups, great for short-term traders. And How to Bottom Fish Like a Pro, which we're going to be using some of these strategies here in the trade that I just talked to you about in the blockchain trade. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on the screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.